Now, hi everyone, welcome to Life Edge. This is our pre-show. We're just getting all our shots ready. We have Susan Nash right next to me in that window, and right next to her, Darlene Beaubien, which is our guest today, who is our guest today. And let me just go through these.
Thank you.
Yeah, thank you. And that's your shot. There's Darlene. And that's going to be two shot. That is our two shot. Single, and that's our three shot. And if you're wondering what we're doing, this is what we see when we're running the show. I think we went through this before. So this is vMix software, which has all of our shots and how it's our control panel, how we control all the switching and audio and everything else. And that's another shot. So I think we are good. So we're going to start from here. And Darlene, are you ready to go?
I'm ready to go.
Okay, here we go. So Susan, we're going to count it down, and we're going to start the show recording in 3, 2, and 1. Hi, everyone. Welcome to Life Edge, because life just doesn't have to be mediocre. And sitting right next to me, a mere several thousand miles away, someone who's not mediocre at all, Dr. Susan Nash. Dr. Susan, how are you today?
I'm great. It's a beautiful day here in Oklahoma.
Good, that's right. You are in Oklahoma. I wasn't sure if you were traveling today.
I'm here in Tulsa, Oklahoma. Beautiful cloudless day. Great day for walking and checking out nature.
Okay. All right. So we have a very good guest again today, and we are going to start the show now. Here we go. Susan, would you like to do the honors to introduce our guest today?
I'm delighted to do so. We have a wonderful guest today, Darlene Beaubien, and she is an economist who has specialized in oil and gas and energy. And I just want to say hello, Darlene, and welcome.
Thank you very much. It's a pleasure to be here.
I'm really thrilled to have you here because I think that you can help us explain some of the mysterious ups and downs in the oil industry and why right now the price of oil seems to be creeping up. It's like $41 a barrel from a low of about 26 barrels just a month ago. What can you tell us about that, Darlene?
Well, the first thing I can tell you is not to expect that to remain, because one of the characteristics of the oil industry is volatility. And so if you look at the price of oil in a band, you might say something from the high 30s to the low 40s. And that's about as specific as we could be right now. You'll see some movement up, you'll see some movement down. Earlier this week, you saw some indication that Saudi Arabia had come to an understanding with Russia about controlling production. And so that, pushed the market up a tick. However, something else could happen. Other producers could express an interest in raising production, and that could push it down a tick. So the one thing we know is true about oil prices is that there is a volatility that will persist from now until ever.
And it's pretty much been that way from the beginning, hasn't it? It's a commodity of sorts.
Absolutely, it is a commodity. Now, prices were more stable when you had controlled or contract prices, at the wellhead, and these contracts would last a fairly long time. However, oil prices are decontrolled, and there's a futures market, and so there's oil trading, and therein, from there we get a lot of volatility.
Now, how did you get into? You're an economist, right?
I am.
How did you wind up in the oil and gas industry?
Well, I got an undergraduate degree in economics from Stanford and then a MBA. from Washington University in St. Louis. And at the end of my program, I thought to myself, what industry could I go into where I'd pretty much be assured a long-term future? And I thought oil. I had a job offer from Exxon, and I had a job offer from a bank in Chicago, and I decided I'll go with Exxon.
That's really interesting. And of course, we were talking about extremely volatile conditions, so I think that probably you had a chance to experience not just the high prices, but low prices. And I wanted to ask you, what are some of the upsides and downsides of the low prices that we're seeing?
Well, and it depends on your perspective. On the upside, from an economy like ours, you see an overall boost to our economy. For example, any company, any industry for that matter, that is using oil is going to experience lower costs, so higher profitability. And that is true in any transportation-related industry. It is even true, say, for a producer who's producing oranges in Florida and shipping those oranges to New York because they have lower transportation costs. And so you see upside throughout the economy. And the same is true for other oil importing countries as well. For example, Japan, that imports almost all of its oil, is going to see a real boost to its economy.
Now, here in Oklahoma, where we are dependent on oil and gas, I'm not seeing too much of a boost. I'm seeing layoffs and then sort of savage eviscerations to the state budget because the state relies on a lot of excise tax and production tax from oil and gas operations, as well as income tax. But I'm wondering, are some of the oil producing nations in pretty much the same boat?
Well, absolutely they are. Absolutely they are. When you look at countries, in even worse situations like Venezuela and Nigeria, experiencing a horrible, catastrophic impact on their economies because they are so dependent on oil for their revenues. And so when you look at a country like ours that has a diverse economy, we can rebound. We've got manufacturing. We've got, many other industries versus some place like Venezuela or Nigeria, which is absolutely dependent on oil production and the price of that production.
That's interesting. When you bring up manufacturing and all that, I keep thinking of China as one of the most at-risk countries with oil prices up and down because it doesn't sound like they produce much of anything. They import the oil, and they're the biggest manufacturers.
They are the largest importers of oil in the world, but China's an interesting case. It's a good, bad case because China does import a lot of oil, then it experiences low oil prices and therefore a boost to its economy. On the other hand, China also uses a lot of coal, and so the impact of low oil prices in China is fairly limited to transportation versus manufacturing or electricity generation where they use a lot of their own coal. And let's look at it another way too. China has loaned quite a lot of money to Venezuela, to Nigeria, to other countries that are relatively poor economies because they wanted to ensure oil production for import. When you look at where those economies are now, those loans are in risk of default. Think about a loan to Venezuela. Think about a loan to Nigeria with oil prices where they are. So, sometimes the good and the bad, the up and the down is not as clear as it might seem.
Oh, that's really interesting. And also, I think we have to look at the demand side of things as well. With the economy of Europe being sort of in stagnation, that's not helping demand for the manufactured goods, but then with a low price, maybe things will, I mean, it just becomes all just a cast of characters that are all interdependent and interwoven. It's fascinating. But I just have a question too. What would happen if the U.S. if there's just like a lot of easy money, and we could make it available to try to stimulate more production or overcome some of the problems of the pricing? What do you think would happen?
Well, I think that's a good question. And, you know, it's a question that a lot of people are thinking about in the industry because with easy money, meaning the interest rates are quite low, you can expect a boost to the economy. We've, of course, had low interest rates in this country for a long time, and we've benefited from it. It's provided easy money, if you will, for investments of all kinds. On the other hand, when you think about the oil industry and investments in the oil industry, you have to think about oil competing with many, many other sources of investment or ways to invest your money. So oil investments as compared to housing investments, for example, as compared to the investments that investors might put into a whole range of other sources of opportunity. So easy money does not make oil in and of itself a competitive investment. If oil prices are declining, then investors probably are not going to be drawn to oil versus other opportunities to invest their money.
Also, it's sort of interesting because if you really look at the nature of the industry, most people don't realize how much oil affects everything. Every product we have is touched by oil somewhere. Every plastic.
Absolutely.
What would happen if oil production just stopped? Science
I'm sorry,
fiction
Rick,
theme.
what did you say?
I was saying, what would happen if oil production just stopped? Kind of a science fiction theme here, but I'm just curious. Everything would pretty much stop.
Everything would, in the short term, everything would stop. Mm-hmm. And actually not the short term, but for a relatively long time, because let's just face it, this world is dependent, absolutely dependent on oil. Mm-hmm. Now, you know, consider there are renewables, there's hydro, there's wind, there's solar. These are sources of energy that are being invested in, but let's face it, they're at relatively early levels of production of energy. So in the long term, we can imagine a shift to renewables, but in the short term, I'm afraid things would come to a grinding halt if oil production just stopped.
Now, do you ever think we would get to, there's been a lot of talk about it, there's been some scientists who claimed it, cold fusion, which would be interesting. They haven't gotten there yet. There's been experiments.
Haven't gotten there yet.
No,
haven't gotten there yet. You know, one of the wonderful things, though, I think, about being in this industry is the research and development that goes on in this industry. I mean, you look at places like MIT that are looking into various ways to produce energy, various also ways to consume energy and to lower our energy consumption per unit of production. All of those efficiencies that can be wrung out are being researched, as well as new and various ways to produce industry or energy. It's a dynamic sector of the economy, and that's what makes it so much fun to be involved in.
I'm so glad you mentioned that in research, because I'm fascinated by the impact of new technologies, and obviously the new technologies with horizontal drilling and multi-stage hydraulic fracturing is what kind of created an oversupply in the United States of oil and gas. But at the same time, right now, with the price dropping, a lot of companies are going back in and buying bargains at low prices, where they can go back into old fields. And Rick, California is a great example of this. Do you realize that even after first and secondary recovery, there's still 2/3 to 3/4 of the oil is still there. So they can
Mm-hmm.
inject it with carbon dioxide and get out another 34%.
Interesting.
Absolutely, and that's one of the things that these new technologies, and specifically horizontal drilling, has done for us. It's allowed us to reach economically produced oil, to produce oil economically that would not have been produced. These wells would have been abandoned, a decade or more ago. Now we can get at that oil.
And we can keep from killing ourselves. Rick, you're kind of close to Ventura, right?
Yes.
Well, I don't know if you've
Actually, I'm
driven
in
by
Ventura
there and you
County.
see all the hydrogen sulfide warning signs.
I've seen some of those. If you go up by Ojai, they have that.
Yes, exactly.
Yeah,
And
we
so
live in
with
Ventura
technology,
County,
they can we can do all sorts of things to make what we couldn't produce before producible, etc., and cheaply.
That's true. That's true. And for the
You know,
most part,
Susan, to go back to a point that you had raised earlier about the sort of mergers and acquisitions that we see now in oil and gas, I don't know if you realize the number of producers that went bankrupt in 2015 shot up by nearly fourfold. We had 70 bankruptcies of oil and gas companies in 2015.
Now,
and
what caused that?
That's versus about 15 in 2014.
Wow.
So a dramatic rise in bankruptcies.
what was the
and
cause
so-
of the bankruptcies?
I'm sorry, what did you say?
I'm sorry, what was the cause of the bankruptcies?
Well, when you have oil and gas prices fall, and you have investors or companies that have based their drilling operations and their capital expenditures on loans from investors, the price of oil falls and they don't have the revenues to repay those loans. And so, therein you have a catastrophe for those small producers and those mid-sized producers that just simply cannot service their debt at
Now,
lower energy prices.
Were a lot of those older or newer companies?
A lot of them are newer companies
Okay.
that don't have deep pockets. And these are a lot of the entrepreneurs that got into shale drilling and were really essentially the fuel that brought the energy behind this whole shale boom. It's unfortunate that they are the same companies that when the prices drop are not able to service their debt and that therefore go bankrupt.
Right.
And some of the larger companies, such as Sandridge and Chesapeake, the larger independents who are the pioneers of some of these techniques, think that they were sort of victims of their own success because it was just too big and too much.
Even some of these companies, like Chesapeake in particular, has been reported to have problems. And so, you'd be surprised. It's not only the one-man, two-man operations, small companies, but it's also quite larger companies that are being impacted. Companies that are really focused on shale, North American shale, are those that are most impacted. Other companies, the largest ones, for example, the majors, that have international investments and are invested in various kinds of production, some high cost, some lower cost, fare fairly well at times like this.
That's a good point, and I think that they can weather the storm because of diversification, and also that they don't have as much debt. And I think a lot of the companies are simply are being strangled on their own debt.
Yeah. Or if they may have quite a lot of debt. However, relative to their revenues, it is manageable. It's very manageable.
So for the
That's a
people
good
watching,
What do you see in among the Oklahoma producers, Susan?
I'm seeing a lot of new opportunities coming up where people are coming up with funds to purchase existing opportunities and revitalizing reservoirs and mature fields, but also seeing, unfortunately, quite a few distressed companies and distressed properties. But there's not a lot of movement as much as you would think, but I think a lot of it's because people are kind of paralyzed by the uncertainty.
Now, Darlene, how is the current economy, especially in the oil markets, different from what it was in the, I'd say about late 80s when Texas pretty much collapsed? Are we in the similar kind of state?
Well, we hope not. We hope not. You know, a lot depends on how long prices remain low. We could come out of this thing relatively fast. For example, U.S. production is beginning to decline, and if we can get a balance in oil markets, right now we've got an imbalance, an oversupply of about 2 million barrels per day. In other words, the world is producing 2 million more barrels per day than it is consuming. So what we need to off-balance that is obviously either some countries to reduce their production. Hopefully Saudi Arabia will do some of that. Hopefully the U.S. Will do some of that. In fact, the U.S. is beginning right now to see a decline in production, which is a welcome thing because it may help boost prices. All of that to say, hopefully we won't revisit the 86, 85 decline that we saw, which lasted a very, very long time. It lasted nearly a decade. And we'll come out of this thing relatively fast.
So just to be a devil's advocate here, why are high prices for oil good for us versus for the consumer where it's a lot lower, especially in gas prices, like at the pump, things like that?
Are you asking why high prices are good for some aspects of the economy?
Right.
Obviously, the higher the prices, the more investment we get in oil and gas. And when we have investment in oil and gas, we're producing something that does, we find, first of all, oil and gas, that's not going to go away. So we invest in exploration, and what we find does not go away. It becomes a long-lived asset because oil wells produce for 30 years. And so this becomes a long-lived asset for our country, for wherever those wells are explored for and produced. It's in the short term that you get these disruptions, you get these bankruptcies, you get these layoffs, and those are always very, very painful to experience.
Sure. Now, I read somewhere recently that in the future, two of the largest oil-producing countries won't be in the Middle East, but it could be Canada and the U.S. Do you think that's true?
Absolutely.
You do?
I absolutely do. I absolutely do, and I think that's very exciting. And it is all due to our shale well production, our shale discoveries, and our shale well production. Right now, we suffer because the cost of that production is a lot higher than the production, exploration and production costs in the Middle East, but that production, those reserves don't go anywhere. We've got those reserves for the long term. And coming from those reserves, you could see very well the highest production from the U.S. and Canada.
Interesting. Well, we are almost at the end of our time. Susan, would you like to ask the edgy question?
I would love to. Okay, so the name of our show is Life Edge, and sometimes it refers to the edge that you have, or what has given you an edge in life, and sometimes it refers to just comments and philosophies that give people in general an edge in life. And I was just wondering what you think has been positive for you in your life.
I would have to say access to a world-class education. which is one of the things that this country affords. I think we are just so very, very fortunate to live in a country that has the kind of universities and research that is going on versus other places in the world. So what has given me an edge, I think, has been the availability of a very elite education, if you will.
I think too that combined with your passion, I think you have such a passion for education and a passion for knowledge and for explaining the world, it's very inspiring to me.
Well, I have to say, I'm also fortunate in that I chose a field that I absolutely love, and it has been the source of incredible reward for me over the time, the decades that I've been involved in this industry. I just simply don't get tired of it.
That's great. And that's one of the beauties of choosing something you like. It's not work anymore, it's fun.
Absolutely. It is absolutely fun. My husband talks about me because I read economics and oil and gas journals at night before I go to bed. He's reading fiction and I'm reading oil and gas journals and having just as much fun as he's having.
Oh, that's funny. Well, great. Well, Darlene, we're glad you could make it on. We really appreciate you coming on and kind of helping enlighten people a little bit about an industry that a lot of people don't really understand that well. And if you are watching the show, please subscribe. We are now back on Vimeo. So the live streams are on YouTube and on Vimeo. You could go to vimeo.com/channels/LifeEdge and you'll see all of our shows there. Well, Darlene, again, a pleasure having you on. Susan, as always. And we will
it's
see
been great,
you all.
Darlene.
Yep,
And it's been a pleasure to be here. Thank you for having me.
Oh, our pleasure indeed. And we will see you all next week. Have a good one, everyone. Thank you. Bye-bye.
Bye.